We'll get the rest of the folks up on stage just to get started before everyone's up. Hey, if you guys are mic'd, you can come on up. Hey, Jeremy. Thank you. So I'm Pete Townsend, founder of Norio Ventures, partner with fintech founders to help them build their ventures, and also the co-host of the Money Never Sleeps podcast with Owen Fitzgerald, who was here yesterday speaking. And we're recording various snippets of this for an episode that will be packaged up together with the FinTech Network's permission, obviously with Dean Murphy. So first off, I just wanted to thank Dean, thank the FinTech Network for having us all here today. It's a fantastic crowd. Thanks to everybody for coming. Before I introduce the panel, I just wanted to get through a show of hands so that we know the folks that we're speaking with here today. Just who's working in financial services from a bank or other institution? Yeah? Okay. There we go. You got your hands raised. Yeah? Okay, a couple is here. Who do we have from startup community? All right, very good. Any consultants? A couple. Okay, all right. So mostly industry. Anyone else want to shout out?
What is the rest of the crowd doing?
Yeah, rest of the crowd? Government. Yes, thank you. Key stakeholder in all this. All right, so thank you. So just to introduce the panelists before we jump right in, we have Jeremy Wilson first, who's the vice chair at Barclays. Jeremy has stated his undying commitment for his grandchildren and has said it's a whole new wonderful world. I'm a father for 7 years, and hopefully that time in my life will be a little bit further down the road. When you, yeah. We also have here with us, we have Paul Claudius down at the end. He is a managing director from Blockstate. He has nearly a 1-year-old daughter. He's also the chef at home, so likes to get into that like myself. Usually when you are the number 2 option for childcare, you do spend a lot of time cooking, especially when you have someone less than 1, obviously, right? We have Ioana S., which she's asked me just to refer to her as Ioana S.
For your sake, because you could.
Thank you so much. I appreciate that. She is the Director of Government Affairs at Citi, based in Brussels. We also have Maura McLaughlin, who is a partner at Arthur Cox. Sorry, first on Ioana, she describes herself as a comic book nerd. And a movie nerd, but only high-quality movies. So it's important, that 5-star distinction. And also, she is influencing her daughter, her 7-year-old daughter, in that direction, which I think is fascinating. Maura, you didn't get to share with me one of your snippets when we had our prep call, but yesterday, her associate from Arthur Cox, her associate, I can't really say that, her colleague, because he's not an associate. If Pierce heard me say that, he'd shudder right now. But gave me a wonderful book that Arthur Cox contributed to all around cryptocurrency and blockchain, which I think is going to be fascinating reading. It's about this thick and has a very interesting legal view from all around the world on that. So, and then finally, Jens from BaFin. He is, and I love this title, Investigation Department for Illicit Financial Services. Right, that word is clearly important, is illicit. And what Jens shared with me is his love for restoring old cars, preferably those with as little electronics as possible. I had a neighbor growing up, Marty Siddell, next to me in Springfield, Massachusetts, where I grew up, based here now, and he restored old cars as well. That was his day job, his hobby. His day job was working for the state of Massachusetts as an architect, and he designed all the Burger Kings along the Massachusetts Turnpike. As benefit of being his next door neighbor, do you know what we got? We got Whoppers. Anyone have a Whopper recently? It's a big, huge Burger King burger. Yeah, good, health kick. They're not good. These things, these Whoppers were about, Eileen, I see you smiling in the back there from Wilmington Trust. Give a shout out to Eileen. These things were about this big, folks, okay? Before they were cooked, the amount of fat in those things, all right? So, little health tip that you didn't think you'd get at a blockchain conference, right? Stay away from Whoppers. Hopefully there's no investors in the room for Burger King here today. So folks, just to get started, after that introduction, Jeremy, maybe we start with you and we'll go right down the line. Maybe you could just share with us your eye-opening moment with regards to coming into the blockchain space.
So yeah, thanks very much, Pete. I have to say that the reason I mentioned the grandchildren to Pete when we were first talking about this last week is that I've come to realize that a lot of what we're talking about here is really their lives. They will be living this stuff day in and day out. And if what we're looking at is things that are going to move forward over the next 6 months, 1 year, a decade or thereabouts, it won't be fully built into the system, I suspect. Not the story as I see it, until for another 3 or 4 decades. Now that's of course when my grandchildren will really be seeking to come into their own, and I'll probably be long since under the turf. So I guess the eye-opening moment, it's very hard for me to pinpoint this. I went to there's a thing called the Sibos Conference, which is a huge payments conference that takes place annually around the world, and all the bankers go to it. And the World Economic Forum had, off the side of that, a breakfast. And it was at that point, this was about 5 years ago now, I think, in Toronto. And there was one table talking about blockchain. That was the first I had ever heard of blockchain. And when I got back on the airplane, I thought, this feels as if it's got something pretty profound here that we need to think about quite hard. So there was a young entrepreneur called John Edge, some of you may have come across him, who used to work for JP Morgan, then went out, did his own thing, made quite a lot of money in his own account. And I called him and said, I really think there's probably an opportunity here for the government, the regulators, the public sector generally, and the private sector, the incumbents and the insurgents, to get together in a room and start to talk about this. And that began what subsequently became the Whitechapel think tank, which meets once a quarter now. And that's the community it consists of, including academia.
So that's where it all came from?
So that's where it came from. Before I stop, Pete, because you don't want me hogging the speaking time here for this introductory stuff, but what I have since come to realize is that blockchain and distributed ledger is an integral part of something much bigger and much more significant. Now that we have this suite of new technologies that have come in off the back of the computer and then the internet, which enable data to be shared within boxes and then at scale, we now have all these new technologies. And it seems to me that they are increasingly interacting with each other, whether it's AI, all the cognitive computing skills, all the quantitative computing capabilities that are being brought into it, machine learning, robotics, all these new technologies are now beginning to interact with each other with diminishing human intervention. And so the token seems to be moving itself into the heart of what I call a new operating system. And I mentioned this briefly last year here. It seems to be moving inexorably in that direction. And of course, with the token, because it is, there are scientists here who probably quibble the way I'm talking about this, but it seems to me the token is an essential ingredient or part of the distributed ledger technology, or technologies. That is going to be at the very center of all this as it develops and as it evolves. So basically, my light bulb moment, Pete.
That's your light bulb moment. Thank you, Jeremy. Jens, you had something kind of similar when we were talking about tokenization. Obviously, folks, that's a topic of the panel is tokenization and where we're moving towards that. I think it was back in 2010 that you mentioned you had your eye-opening moment when you were first thinking about Bitcoin.
Yeah, there was at least 8 years ago when there were a couple of questions from public prosecutors, from companies, and from consumers. Well, there is a kind of new thing on the market. It's called Bitcoin, something coin. Yeah. And what's about that? And so there was, in the beginning, there were a couple of questions, like 2 or 3, and then it gets 10, and then it gets 20. And at the end, there had been so many questions about that we finally have to draw a decision from the viewpoint of the supervisor. What kind of instrument is that? Is that somehow legal? Is it somehow illegal? And if it's legal, what it is within the nomenclature of the financial system and the financial market. And so nobody knows exactly what it is. And so we just sit there and try to figure out this Bitcoin network, getting further and discovering something which primarily looked like a kind of database, but which is probably not only a database and which is commonly named blockchain.
Yep.
And that was for us the essential, or for me. In the beginning, I was alone, and I get a colleague working with me, and I think right now we are around 40 people working in connection with some blockchain issues. And that was for me the initial moment when I realized that there was no company behind that there was no central administrative unit working with that network, but it was the network itself.
Yeah.
And we just sat there and said, okay, well, right now we're talking about a kind of a virtual currency, but what would be the future role when this would not only happen to a kind of currency unit, but imaginable this would happen to shares or securities or else on blockchains without intermediates. Will then there be a need for a supervisor, which raised a little bit of fear, but right now it's getting lower, because the funny and weird thing was that when it gets popular, the aim of Bitcoin was to get rid of all these financial intermediaries. And as soon as it gets popular in the market, there are a lot of services popping up and offering the same services that has been offered before for the traditional system, which is quite funny at all.
Yeah, I like to look at it as a spectrum between crypto anarchy and crypto capitalism, right? There's a mix of the two that will result in, the capitalistic side driving towards, well, let's create some more intermediaries around this. Interesting point. The other interesting point with what you said there, Jens, was that it's just very heartening to know that one of the largest economies in Europe have 40 people in BaFin that are focusing on this, right? Which is, just underscores the how important this is. And coming out of yesterday's and initial feedback from folks, hearing some restraint from some of the institutional sides on, well, it's not here yet. It's here, guys. And the type of work that I do with clients is testament to that. Maura, from your perspective, one of the things that you mentioned was, and Jens touched on it, is that from the regulatory standpoint, that, your kind of eye-opening moment was around, you've got clients asking for this, but you're not able to give them some clarity yet from your friends in the central bank. And tell us about your eye-opening moment.
Yeah, I've been a corporate lawyer for almost 20 years, so I like to think I know something about funding companies. So the first time this was suggested as, cryptocurrencies was suggested as a method of funding companies, you think this is not going to work, it's a fad, whatever. But then actually, as we began to look into it and explore it, we realized actually this is potentially a massive opportunity for businesses to get to scale by funding themselves from their users and stakeholders, which actually potentially makes for a much more robust business model than endless small incremental rounds of venture capital, private equity, and so on, and then you eventually get your thing to market and discover no one wants it. It's not great. And then as you said, the sort of other end of it, right up to companies who have scaled right up to IPO, the opportunity for faster settlement, for greater transparency about who your shareholders are if you're a company. All of those things are there. But it really is, I suppose, a barrier to being able to really kind of, I think, make the most of it, the fact that we still lack regulatory certainty. And I think there's a danger that there's somewhat perhaps of a red herring around the, is it a security, is it a utility, exactly how you classify these things. Because I think it does come back down to actually the points you were making, which is that regardless of which way you classify it, if we can say that actually there are some things that everyone who wants to sell these tokens or use this infrastructure will commit to do. So, they will commit to, disclose exactly what they're going to do with money and stick to that. They will disclose their conflicts of interest. They will disclose risks around their business model. Those things are familiar to us from a securities infrastructure, but we don't have to go straight to that model, that sort of most, full metal jacket model for all these other types of coins. And so as you say, I think for us, where we would really love to get to over the next short while is having more clarity in the regulatory space, so that rather than being the sort of typical lawyers where you say, well, if we aren't sure, we should go to the most conservative path, where we can actually sort of use the flexibility that the technology allows us to really actually help businesses grow.
Very good point. And like I was saying before, the majority of the clients that I'm working with that are blockchain-centric, it's not even that they're blockchain-centric, it's their tech stack now, and that's what they're doing. And is there a token part of the business? Some have it, some don't. It's just depending on what is the way they're raising capital, what is their economic exchange of value, right? You want to you want to talk about your eye-opening moment for a minute?
I think I've had a few, and I'm still in that continuum, I would say, because I'm still an active learner in the space, and I'm happy to be an active learner in the space. I would like to take a different perspective on things. I, like Jeremy, do not look at blockchain or DLT more widely, but blockchain more specifically in a capsule. I think the real added value comes from its interaction and convergence with other emerging technologies, AI and IoT, and the way that enables data to be transmitted, generated, transmitted, and then consumed and monetized, if you will. But I would like to go back to the story of the internet a little bit, because I think what we're witnessing today is a re-democratization of the internet. And I'm stressing on the re, because when the internet was created by governments and academia, it was designed to be for everyone's use. And this is not the model that we're witnessing today. And the fact that the internet, it's now starting to be re-democratized, mostly via the accentuation of the open source and developer movement, has led to the creation of these, I would call them, internet native business models, and their subsequent internet native assets, where these tokens might fit into. And what these new internet native business models revolve around is collaboration, community, and network building. And I think blockchain was kind of the missing link in that, because blockchain, via its game theoretic and cryptographic mechanism, has enabled a function of trust that then allows these communities and networks to build themselves and to operate, right? So we now have a new primitive, which is trust, and we don't need external actors to ensure that trust. It's done via cryptography and game theory with a subsequent incentive mechanism. And I think it's interesting to see, what will be built on top of that. So you now have that primitive. What other applications will be built using that new kind of trust primitive that is created on the network without any third party that needs to fulfill that function? And I think the challenging times for incumbents, not only financial services, but all sorts of incumbents, and I'm thinking of tech companies as well, the platform monopolies in particular, is to find a way to plug into those open networks. And this is where we will see kind of a new ecosystem being built, new ecosystems and new digital worlds being built. And how do we, as incumbents, find a way to plug ourselves into that and service customers that will more likely adapt to or adopt that model? So
that's perfect. And did Paul ask you to say that before he came on? Because that's the perfect transition to what Paul's doing.
Pay me in Bitcoin.
Infrastructure for the digital age, especially obviously around financial services. Paul, just talk for a minute about your eye-opening moment, yeah?
Yeah, I think my eye-opening moment took roughly 4 years, and as you're saying, it's still ongoing. So I was being pushed.
We call that a long blink.
Yeah, probably. So in I think 2013, by a friend who has a computer science background to Bitcoin, and I was wondering back then, okay, this is interesting. What's the use case? I can wire money with it. I think there are other applications which already do this. So I was looking at it, didn't deep dive in the technology at first, but was basically watching it from the sidelines. And it took me a while to understand actually the potential use cases for the underlying technology. And as you're saying, I think there are two different perspectives. One is how can the technology improve already existing processes? And I think this is also the majority of topics we're touching upon here. But also how is this impact being felt on a much broader level? So how does the no more need of centralized trust impact over our overall economy, and also the native models which will be created based on blockchain technology. So I think these are two dimensions, and the important thing is you shouldn't just create technology, but the technology should be used by either an end consumer business for a beneficial way. And I'm very glad to see how beneficial the technology can be already now in financial institutions for certain use cases. But what will be very interesting to see how will this actually touch upon the consumer in the next years when the infrastructure and UX is actually something they want to interact with.
Yeah, absolutely. And yesterday when we had our other panel, we were asking the crowd, uses a Coinbase, uses a Hargraves Lansdowne, very few raised their hand. I think it points to, and someone asked me before we came on stage today, what's going to be the moment where an investor realizes that they're, a blockchain-based framework sits behind their interaction with financial services. And I'm like, they're not going to know, because in a large part, some is just already there, right? And it should be, from a user experience perspective, seamless for them that they're actually doing this. Just to move on a bit into the ideas around tokenization, and that obviously there's a lot of regulatory focus on this at this stage, that what is a token, right? And what does it represent? And the common terms that are thrown around and defined, well, differently from country to country, it seems like, are the payment token, which we largely see as being the initiator of all this with things like Bitcoin. The asset token, where you actually are issued with something that gives you ownership of a business. And utility token, which gives you the right to use a platform or to consume services on a platform. You wanted, just kind of starting with you on some of this in terms of the view from Europe on the different classifications. We talked about this on our prep call that we had a bit on how you see things unfolding with that.
So just to set the ground for the discussion, there's no clear definition at the moment. There are member states testing, also non-member states that are Europe-based that are testing this. I would say Switzerland is the most advanced one because they have come up with this segmentation that you've just alluded to. What is the European Commission doing? Let's move it to a kind of a central authority, from a central authority perspective. So they've come up with this FinTech Action Plan that includes, amongst others, a legal proposal on crowdfunding that was initially designed to tackle more conventional crowdfunding platforms. But as it has reached Parliament, all of a sudden we see a couple of amendments that have introduced the initial coin offerings into this. I would say it was expected. I would also say the Commission is not very happy about it because it was designed to tackle crowdfunding intermediary platforms with a cap of 1 million funds raised. It was designed to only tackle the primary market, et cetera. Now we all know that ICOs do not necessarily, so first of all, ICOs are not done via platform. It's the platform itself. They do not use an intermediary. Sorry about that. ICOs function both on the primary and secondary market, and in no way there's a limit to the amount of funds that they can raise. And if there was a limit, 1 million would not be that limit. And what the MEPs have introduced is, I think, a cap of 8 million euros, etc. What am I trying where am I trying to go with this? To the fact that now I think every single piece of legislation that can be used to start the conversation and introduce basic guidelines in terms of ICOs and what these tokens are will happen. So if there's something that can be kind of morphed into adaptability for these new instruments, it will happen. So this is the kind of the crowdfunding legislative proposal. I would say that throughout member states, you have progressive member states in terms of ICO and token-related regulation, and I would include Malta and France into that category. The European Securities and Markets Association has conducted a survey with member states trying to identify what and if these tokens are financial instruments, and if they are, they will be then included in financial instruments, or MiFID, financial instruments legislation. Now the question arises, what happens if they decide, or not only they, what happens if it is decided that some of the tokens are not financial instruments? Yep. They can be looked at from, prepaid
other assets,
consumer, exactly, services. So it's still an ongoing discussion. just to go back another step, blockchain in itself, it's not going to be regulated ever. DLT is not going to be regulated.
technology.
How can you regulate a technology? Although they are trying to do something with AI from a kind of an ethical perspective, but DLT will not be regulated. Applications of DLT, however, will, and they are, because what everyone is trying to do is insert these applications into already existing laws and trying to define what and where they all fit, right? There might be some problems with that. Why? Because we're now speaking of programmable assets. So today we might be able to pull it off, to use existing laws and regulations and try to assess what they are. But what happens if a coder programs an asset to behave in a certain way and change its value over its life cycle? What do we do then? Do we have the right laws for that? I don't think so. And to make a parallel to the EU, to the US as well. So because of the explosion of ICOs in 2017, now the focus is on their kind of security angle. But it was not the case when Bitcoin started out. So I remember in 2013, it was analyzed through a money service business angle. And then it was considered a property by the IRS. And now because of this, private placements, ICOs, offerings, there's a strong focus on their security kind of hallmarks, I would say. And the SEC is analyzing them on a case-by-case basis.
Absolutely.
And what has happened is that recently they've also started to present what the hallmarks of a non-security tokens would be. And yes.
Yeah, I'm seeing quite a few of those, well, not quite a few, but enough of those popping up in the market that talk about, well, I am delivering value to somebody through this token, but it is not necessarily anything that you could convey a taxability element on top of it at this stage. But Jeremy, you had a thought that you were butting at the chomp.
Yeah, I did, Pete. I mean, I find, Ioana touched on a host of things there, very interesting. And her opening remark was, of course, there are no clear definitions at the moment. And I wonder if we just go back to that for a second, because let me go back to where sort of my head is on this. And believe me, I am not in your league, guys. I don't follow this every single day. I do other things as well. But if we are in the process of putting together something which is, to all intents and purposes, a community of operating systems or a new operating system on the planet where you don't have to intervene a great deal, then, and let me just stop for a minute. I don't know if anybody has heard, there's a guy called, is it Yuval Harari?
Yuval Noah Harari wrote the book
Yuval
Sapiens.
Yuval Noah Harari, who was talking to Andrew Marr, who's an interviewer in the UK, on Monday, on a thing called Start the Week. On Radio 4. And the speed with which some of this is happening, or has happened already, is dramatic. And when you listen to him, you begin to understand what's going on here. But the concept is so difficult to imagine in its totality that actually you don't really fully understand the progress that's been made in individual areas and individual units. So to come back to Ioana's point, I'm not remotely surprised that actually we're still probably struggling with the definitions of these tokens and of these crypto assets and whether they're utilities or anything else. If you envision a situation in what, 5 years' time, 10 years' time, where you say, I really like that house. Alexa, can you buy it for me? This is the top price I'm prepared to pay. And the next thing you get is a confirmation that the house belongs to you. Everything else has been taken care of by the operating system, including the necessary transfer of value, inevitably through a token, and it seems to me, inevitably through a blockchain of irrefutable and, as far as possible, immutable evidence that clearly establishes where you are. Now, how do we get from here to there? And the way it appears to be happening is that individual areas are able to make more progress on this than others because they're focused on some quite specific things and they're moving quite rapidly. And so I don't know, Lee Brain from Barclays, who I think is speaking or has spoken? Will be speaking. Yeah. So Lee may talk a bit more about this, but some of the work that is being done in specific areas of the financial services sector to deliver the benefits of this new operating system. The combination of AI, of smart contracts, and of blockchain infrastructure beneath it is moving ahead. It moves ahead with relatively small communities because big communities are so hard to move forward. And it moves ahead with relatively small people who can get their heads around the expertise. So basically, you've got the flying squad of this extraordinary transformation, which is going to take place for all of us over the next 10 to 15 years. There are several flying squads out there moving this stuff forward. And the greatest source of confidence, reassurance or whatever the right word is the fact that the regulators and the governments around the world, enlightened governments, are on this. And they can understand the potential dimension for the privacy and the improved service and the improved lives of their citizens. And so they're chasing this down as well. So when Switzerland and the FCA and other governments around the world and the EU turns around and says, we don't know where it's going to end up either, and we can't regulate something that hasn't already been established. But we're not going to be left behind, because when the time comes, we need to be there and on the case.
Yeah, and they're absolutely following it. It's such an excellent point. And you know, I've sat in front of the Central Bank of Ireland here in an information session where I introduced a cryptocurrency and blockchain expert to them, my friend Colin Platt from Blockchain Insider, who speaks with Sarah Feenan, who was here yesterday. And they listened intently. You know, and it was an excellent conversation, and it was so reassuring to know that that level of interest was there. More looking at it from the perspective of wearing the green jersey or the green dress in your case. You know, what have been your reflections so far on where Ireland can go with tokenization and with the regulatory setting around that? Where do you see things headed?
Yeah, I mean, I think that we would be very keen, as I said earlier, for more clarity, because we do think that there's a huge opportunity for Ireland here, both because of the level of innovation, because of the level of startups, and also because we already have very large industries around things like aircraft leasing, around the funds industry and so on, that it certainly seems to us they're very rich with potential opportunities for blockchain and for tokenization. So the ability to actually use those and build off the sort of platform that we already have in Ireland, we think is something that's very exciting. But we at the moment find that you know, we want to have the Ryanairs and the Paddy Powers and the sort of the new kind of Irish champions for tomorrow, and this is what all the companies who are coming to us with those exciting ideas and you know, mold-breaking business models, they all want to talk about how to use this technology or how to use crypto as an opportunity to grow their business, but we always end up coming back to this discussion, and no one wants to have an exciting business idea and end up in a discussion about whether it's a utility or a payment or a security.
Yeah.
And as I said earlier, I think fundamentally, if we could have something that is a common understanding that whichever of those it is, there are certain things you need to make sure that you tell people, and I think the previous speaker mentioned this, that you know, you need to be cautious about selling it to retail investors. You need to tell people what the risks are. You need to say that, you know, you may not get your money back, and all of those kind of basic things. And I think that actually, even from the first ones that we've seen, where we were getting white papers, which were, you know, 3 pages in very large font, to, you know, now we don't want to turn that into a 500-page prospectus, because then you've effectively stymied the whole thing. But we are seeing a much more sophisticated approach, because at bottom, I suppose, looking at it as a lawyer, because that's what I am, you know, these are contracts, and they're of varying complexity, and so you need to have things like decide where you're going to deal with disputes and decide whether you've disclosed risks. But once you get beyond that, you know, it's a question of how much formality or not we're going to impose. And I even speaking as a lawyer, I wouldn't want it to be so much formality that actually you end up stifling the innovation that's at the heart of it.
Yeah, that's the thing, and you want the clarity. And I see that all the time, is that how can you effectively say to a venture capital investor in one of these businesses that, listen, your investment is fine. You know, the taxability around this is crystal clear. No worries. It's hard to do that today with some of these things, right? And that's why ICOs came along rather than the pure venture capital investment, because the taxability isn't quite certain. Jens, from your perspective in Germany, what are you seeing around the classification of tokens, and where do you think this is headed?
Well, what to be honest, what we try to do is a little bit a kind of demystification of ICO and tokenization, because when we looked at that blockchain model connected with Bitcoin, that was really new because we have no company or no institution behind all that. But when we have a look on ICOs and when we have a look on other tokenization things for, let's say, Bitcoin 7.0 or whatever, there is obviously a company or an institution or a kind of organism behind it. So that is not comparable with Bitcoin. Because there are certain people handling blockchains, or at least claiming to handle these blockchains. And then we're getting closer to the thing, whether the blockchain is more or less a kind of a private database anyway. But what we try to do is not to look at the technical aspect of the standards of the blockchain and how the tokens are stored, whether it's kind of standard it is. Because, as everybody already mentioned, this is technology, and there's probably there are some KYC additional operational risk, which are on focus of a supervisor. But the technology itself, nobody really cares whether you do stone carving or papyrus rolls or magnetic tapes or probably blockchains. So what does a token represent? And in most of the cases, we've been able to go back to the good old days, like we have shares or other forms of securities. The question was, what was represented by these tokens? Mm-hmm. Not the question how this token is based on the blockchain and probably how it's treated on the secondary market, but what kind of rights are implemented within this token. And there's a broad variety, of course, which is probably slightly broader than in the old days with shares and securities. But nevertheless, most of them you can fix to a certain part. So they're a kind of donation token, which they simply say, well, you give me money and you get nothing back.
It's a souvenir.
Yeah, this is a kind of funny party thing or whatever. But
Indiegogo, Kickstarter type stuff.
That you don't get a reward.
Yeah.
And on the other hand, as we're talking about utility tokens, it's clearly said that there are certain rights for it to buy a certain goods in the future when it's produced or whatever. And so you can fix this to the old system like we had with shares and securities. So we knew when there are prospectus rules, when there are license requirements for share trade or whatever. And so it is probably not that complicated as it often seems. Because you don't have to focus on the technical way to implement tokens within blockchains. But you have to focus on that, what they do represent, and then simply decide whether it fits in the existing supervising system, which it does in most of the cases, and in the other 5 or probably 10%, especially in those tokenizations where you get an extreme hybrid form. That means part of your money is kind of donation. The other part is a little bit like security-like. And then there's a utility thing. And then it should be not only used for that, but in the near future, it might be a payment instrument on a platform or something.
Yeah.
And then it's getting difficult because what some of the ICOs did, or still do, is to lift the traditional borders between the financial instruments themselves.
Yeah.
So the mixing of functions and rights for retail, for consumers, this is an ICO phenomena, but it's let's say in 5 or 10%. And there we have to think how we do classify that within the existing system, whether it works or probably whether there's a need for certain extension in lawmaking or whatever.
Yeah, one of my favorite lawyers, we'll come back to you in a minute, Joanna, here in Dublin said it to me once, with some of these new innovative ideas, she always brought it back to the basics. What are you looking to do? What is the activity that you're undertaking here? And what is the prescribed regulation that already exists that you may need to put on top of that activity, right? Joanna, you were about to jump in there with something.
I'd like to ask a question if possible.
I'll come to you, Paul, in a minute, yeah.
In a sec, sorry. We're still we're at incipient level with the technology and its subsequent applications. And this kind of fitting the applications into existing rules works for now. Do you what do you foresee? Would it work in 5 years from now? Because we don't know what these tokens will develop into and what the networks they reside on will develop into. So isn't there maybe, is there a discussion going on around creating new laws to capture everything that's going on?
Okay, to be honest, we don't have a foreseeing department.
Maybe you should.
Probably it is interesting to think about that and probably to establish in the near future. No, but to get serious again, of course, nobody expected Bitcoin. So when it appears at 2010, we were really surprised. Because I just have to do with that because I'm the only one just taking his hard disk out of its computer by himself. So this is something IT, so do that. And right now, there are a lot of people working on that. And of course, we look on the market. But what we don't do is, let's say, to develop scenarios what probably would happen within 5 or 10 years. Because this is a kind of foreseeing thing, and I think you could probably imagine what will go on within a period of a year and how the development, because you see the players at the market, see what they are thinking about. You know what questions you ask as a supervisor for new business models. And so there is a direction that can be estimated, yes. Mm-hmm. But it doesn't. I don't think that it goes that far that you can, right now, prepare law drafts for that may be in place in 5 or 10 years.
Yeah, I think it's a matter of, there are things that are happening right now where under the current laws in different jurisdictions that asset tokens are being made available to investors, and it's fine, it's okay. I think these things are happening. I think as things evolve and you start getting into things like hybrid tokens, which are a combination of share ownership as well as utility, that's where you start to get some questions. Paul, Claudius, my friend, Roman countryman, Claudius, yeah. You have in front of you right now, obviously, other than the wonderful crowd here, but you have representatives of 2 big banks here and here, a regulator.
I'm not too excited about that.
I'm
very excited.
A corporate, a corporate lawyer turned partner at a big law firm. We talked about how things will be unfolding over the next few years and that collaboration that would be fantastic to see between the startup community, between banks, regulators, the legal community. You've been through a pretty incredible experience so far, and the representation that you have in Switzerland, in different places. Maybe talk about how you'd like to see things unfold.
Yeah, to touch upon the regulatory part, so Switzerland was basically a decision not because we were all Swiss-based, but because at that time it gave us the most explicit guidance on how to treat certain asset classes. And what I see now is that a lot of startups and young companies are doing a kind of regulatory cherry picking depending on the service and products they're building and offering. So when we looked at asset tokenization, I mean, in Switzerland this is already quite explicit, but in Liechtenstein it's even more advantageously regulated. When you create a so-called utility token, Malta right now is fairly beneficial. So you see that depending on your underlying business model and products you're offering and focusing on, there are certain jurisdictions which make more or less sense for you right now. This is actually something which I think is kind of not a threat to the overall industry, but would be very beneficial if we would at least on the so-called token asset classes to have a harmonized regulation. I mean, I do understand that we won't adapt certain already in place security laws and have it harmonized across all member states and in Switzerland. But I think there would be a huge advantage for Europe to have a common understanding and classification. And I think this would create a big push and attract even more startups for the whole region, because this is what we see in Zug. So Nobody's in Zug because it's such a beautiful village, right? So
I thought you said it was the highest standard of living in Europe.
it is probably. And our journey as a company so far. So when we started, actually, why did we start Blockstake? We saw, I said, I watched this quite along on the sidelines, and I saw there was no real development in how digital assets were being assessed, even by consumers, but also by institutional investors. So we thought about how can we make these assets accessible, and this was basically our foundation first step, to make it accessible through existing market infrastructure in a regulatory compliant way, because a bank, financial institutions, they just can't set up a wallet and hold these assets, having no regulatory guidance around them. So this was our starting point. And working more on the technology, we actually understood also better the needs of financial institutions, what products they actually have in place, and where DLT might create more efficient products for them. So for us, it's not really, we're not trying to disrupt an industry, but rather disrupt technology and making it accessible to institutions which have different focus areas and different setups which don't enable them to create these technologies in-house.
Just before we move on to questions from the crowd, Joanna,
No.
you're about to express something. Jeremy, you look like you were about to express something.
No. Let's have some questions from the
Yeah.
I-
Leave it up to the
These things
crowd.
are so instructive, yeah.
Get some chat going here. Who's ready? We have one there, the gentleman in the tie. Middle of the table, middle of the crowd, Peter.
Thanks.
Yeah.
Is there a, thank you. Yeah, so my name is Eamon Maguire with KPMG. I'm out of the United States, so I have a US perspective on some of this. I guess as I'm listening to the crowd, and it's particularly the regulatory evolution in Europe, on my own side, I expect that there will be, in short term, a fairly clear convention around the treatment of tokens. But as we begin to recognize that ICOs are likely security-based tokens, and as the SEC extends its reach because of its extraterritorial reach from a primary or secondary market point of view, and as ICOs begin to absorb the requirements of the SEC, do you think, number one, that ICOs will retain their attractiveness? And number two, do you think that ICOs will begin to displace conventional IPOs in the capital markets marketplace?
I can address that. Anyone else has a view? Well,
Yeah, go ahead.
Yeah, so ICO, as an initial coin offering, I think a security token offering does have the potential to replace IPOs. It's just for different size of offering probably, because it can be more cost efficient. Will ICOs in general remain an interesting funding opportunity? I think it really depends on the amount of capital you're trying to raise, because nowadays ICOs also are quite cost intensive to do in a regularly compliant way, and also marketing costs are quite high. So I think if your capital needs are below 5 or 10 million, an ICO nowadays doesn't make a lot of sense, and you should probably go through traditional venture capital. One thing you're touching upon, as you're saying, you have an American perspective on the whole subject. I think this is interesting, that basically a technology which enables you to reach everyone across the globe instantly is becoming more and more local because of regulation. So when you look also at the security token offering on ICO, even you say from Malta, it's a beneficial regulation, for example, it's a EU member state. Nonetheless, even if they approve your prospectus, you can't just offer this to a German or French consumer, because it doesn't comply with the local laws. So I think ICOs will become more complex, more cost intensive, will still make sense for certain capital requirements, and if actually we're talking about a utility token where it makes sense to distribute it in a wide way, and I do see a lot of potential for security token offerings being a more cost-efficient instrument compared to an IPO.
I would agree, and I think it's, for me, it's seeing an ICO as a new way to raise capital for a business, but it needs to be tied to the need, right? Technology is moving so quickly. Do you have such a quick funding need to be able to build your platform within the next 12 months that ordinarily would take 5 years to build in the past, right? So you need 50 million or 100 million now to do that rather than building it in small chunks, 5 million for your MVP, another 10 million for your Series A, right? I think that's looking at it from a pure venture capital perspective. There's a lot more to consider than just a white paper to some of this. I think we're out of time.
Yeah, which we can't do on the blockchain, that is we need to pinch someone's AV and give it to the next speaker. But just as we go through, Peter, thank you very much. Thank you to an excellent debate. I think a number of you mentioned the words definition. I heard the word classify. We already live in a world of regulatory arbitrage. Some of these products we have now could arguably be regulated under the PSD, right, as a payment system, right, payment service. But interestingly enough, splitting the token and the coin from the blockchain and DLT is really important because being an ex-regulator in a few countries now, we tend to look at these things through the prism of financial crime, and hence exchanges fall under the 5th Money Laundering Directive. On the point about blockchain, yeah, absolutely. In terms of innovation neutral is the way technology neutral is what the EU says. But when you read the action plan, they talk about permission blockchain. And if DTCC moves 11 trillion worth of over-the-counter derivatives on a new security system, that is no longer a blockchain which is a database. That is actually a blockchain which is giving an effect to a transaction, ergo becoming an exchange, and regulators like regulating exchanges. So it's fascinating areas that you guys have brought up. I'd love to take some questions. I just need to grab someone's mic just to volunteer to put
Yeah,
Lorette
well,
in place.
listen, I think we're about to close the panel, Peter, so thanks for your comment.
I just
Appreciate
want
that.
to give a short
I'm
answer to
inviting
your
my
question on pervasiveness of ICOs. So Q2 2018, 50% of all equity funding globally in the internet sector was done via the ICOs. So that, I think, answers your question.
Okay.
And another thing, in terms of differences between VC model strength between the US and the EU, EU is not a VC private equity, is not very strong in that sector. So they will, countries within the European Union and Europe widely, they will resort to alternative instruments to raise capital, crowdfunding and maybe ICOs.
Just quick closing point from Jeremy, yeah?
Yeah, just to say, if this, as I think it will, becomes a major new source of capital of raising funds, don't underestimate the political dimension. It will then, because of its globality and its nature, becomes a threat to the US dollar as a reserve currency. And that is already struggling a bit because of the dominance of China. And so we should not underestimate, as this develops and as this moves forward, it's probably going to start introducing some political components into the regulatory environment. Maybe a few years away, but worth remembering.
All right. Jeremy, thank you. Jens, Maura, Joanna, Paul, thank you.